And he says, let's face it, as accountants, we are a very conservative business. There are clients who actually want to see us, even when a phone call would suffice. As accountants, simply put, it's always a mistake to not go to the office.
Did you write this to be ironic?
Welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
And I'm David Leary. Blake, we're back. Another week.
Another week in 2019. And I heard we got some mail this week.
Let me see. Not that drawer. Not that drawer. That drawer. Let me find it. Was it physical mail? Was it
you know
paper?
what? I'm sorry. It was a Twitter message. Tyler.
Gotcha.
Tyler, who is a listener of the show, Tyler Zollinger, he has a prediction. He listened to our predictions episode.
Oh, what is his prediction?
So Tyler's prediction is that a lot of accountants are going to retire this year. They're going to see 2019 as a great year to retire because they're going to say, hell with lease accounting. I don't want to deal with the new tax law. I don't want to deal with apps or texting with millennials. So Tyler thinks they're just going to get out of the game.
Like opt for an early retirement? But isn't the struggle going to be, are they just going to bail out and retire? Or they want to move their firm, and if the firm's not in the cloud, it's going to be probably hard to sell their firm, or they're going to have to sell it for pennies on dollar, which means, can they really retire?
That's the problem. Well, and maybe it'll happen this year, maybe it'll happen in a few years, but I think there's going to be a glut of people trying to sell their firms. I'd love to hear from somebody who specializes in accounting firm sales, like to know whether that cost is price is driving down for especially the firms that aren't tech savvy. I bet you it's going to be really low.
I mean, you'll be able to sell your firm, but you're going to probably sell it for a lot less per client.
But hey, so it's not good if you're trying to sell your firm these days, I suppose, if you haven't gotten new tech implemented. But what about workers? Things are looking good for workers in 2019, right, David?
According to Accounting Today, they talked about the Robert Half and the 2019 salary guide, and accounting salaries remain high in 2019. So why would you retire if your salary remains high?
What's striking to me in this chart here is there's quite a large range in salary as you move up from senior to manager to senior manager, especially in tax services. So senior managers, they make a low, the 25th percentile is like around 100K, and the 90th percentile is over 200K. So you're almost making twice as much from the bottom to the top.
For that range of senior salary, yeah.
For senior manager salaries,
yep. Yeah. But it's even, it's almost, is it double if you look at even like somebody who's new at a firm that's just up to 1 year? That's almost, I mean, we don't have the exact numbers, but I'm guessing that's at least 39, 40, 45%.
I feel like it depends on the size of the firm too, right? So wait, what's the change this year? Like how much more are people making?
So it looks like it's another $1,000 increase from 2018 for folks with like 3 years experience. And even people that are new professionals with just up to, under a year experience, it was $1,000 increase over last year. So last year was $46,000 and this year it's $47,000 base salaries. So,
okay, I'm thinking about this. Like, is that really that great? Because, if the average salary is $57,500, that's for people with 1 to 3 years of experience. $1,000 salary increase is only less than 2%.
And what did minimum wage go up?
Well, I mean, what did the cost of living go up, right? What's inflation right now?
Usually, yeah, it's more. Actually, we're pretty close. I think in some of those economic podcasts I listen to, I think we're almost at zero. Inflation's really, really steady right now. Who knows how long that'll last?
No, 2018. I just did a Google search. Inflation in 2018 was 1.9%.
Okay.
So basically, these raises are only keeping up with inflation. So I'm calling bullshit on this article. Sorry, Accounting Today and Robert Half. I don't buy it.
There's no context in this. They're higher than they were last year, but they're not. Yeah.
Well, they're higher than they were last year, but they should be if they're keeping up with inflation, right? And the cost of living and all that stuff. This is the big question: is when are salaries really going to increase? If there is a talent shortage, which the figures say there's a talent shortage right now. We don't have enough CPAs. Why aren't salaries jumping as much?
Maybe this is the peak. Like maybe this is all as good as it's going to get.
Speaking of salaries, there's one person who won't have to worry about her salary for a little while, and that is the accountant who is a contestant on The Bachelor this year.
Like, is she The main person on The Bachelor?
Well, no, it's The Bachelor. So, like, do you not watch this show?
I don't watch this show.
Okay,
so I'm not looking for this.
I don't watch it myself, but I'm forced to be around it because my wife loves this show. It's like her favorite thing. So that it's like football for her, right? So, Bachelor is back on. I know because now my Mondays are free. I have to find something to do to entertain myself. And a KPMG IT advisory associate named Onyeka is one of the contestants, and she's 24. She graduated with her master's in accounting in May 2017 and joined KPMG in IT. She's been there as an associate since 2017 and interned with the firm while she was in college. She's a native of Manhattan, Kansas, and got her degree in accounting from Kansas State University. So there we go. We got another accountant on The Bachelor on a reality TV show, and this is not the first, apparently. Going Concern has a nice summary, a list of accountants who have been on reality TV shows, which I will post in the show notes along with this article. So if a little bit of trivia there.
No, that's I didn't know there was a list that has been created at this point. So it's very, very impressive. Well, maybe we could get her over to Cloud Accounting podcast shirt while she's out there getting her reality on.
So what else is new, David?
What else is new? There's quick little app news, I guess, like follow-up story. Remember we talked about Plaid 3 weeks ago? Mm-hmm. And for anybody who didn't catch that episode, so Plaid essentially is a API company for developers to use. And they basically are an API for bank feeds. So if I'm building an app and I want to go get the bank feed data into my app, I would use a service like Plaid to go communicate with 20,000 banks. Mm-hmm. Well, I think 2 or 3 weeks ago, we talked about how they took on $300 million or $250 million in venture funding. Well, they started spending some of it. So they did not disclose the terms of their acquisition, but they actually acquired a competitor this week. So the way it's looking with the amount of money they have, and if they're starting to buy competitors, like Plaid's going to be the game in town, the only game.
Well, or it just means that there's too much VC money floating around right now, and they didn't know what to do with it. So buying your competitor is pretty easy way to use that money, right?
Well, if you don't use it, you can't get the next round of VC money. That's how this game works.
That's how it works. Hey, well, speaking of VC money, one of my favorite SaaS accounting companies just raised $60 million. It's called TaxJar. They do sales tax automation for small businesses. So think Avalara, think TaxJar, actually those are the only two that I can think of right now.
And TaxJar always really went for those small e-commerce sellers too. I think they were really hyper focused. Yeah, very focused on
those online retailers and very focused on small businesses, right, as opposed to enterprise. One thing I've always liked about TaxJar is they are a completely remote company. Everybody in the company works remotely.
You just stole that from me. I was like, I'm going to impress Blake with something interesting about TaxJar, and you just stole it.
Yeah. So, hey, this I think that they've been profitable since 2016, and they did that off of a $2 million seed round. So, not a typical startup story where it's like, let's take millions and hundreds of millions of dollars and not ever make any money until the end. And what's also interesting, David, is that they weren't out there looking to raise money, at least according to this interview in VentureBeat. They were spotlighted by the South Dakota versus Wayfair ruling, the Supreme Court ruling that allows states to collect sales tax from sellers outside those states, which has turbocharged the whole industry of sales tax automation. TaxJar, I imagine, got some very favorable terms on this $60 million. It was a round from Insight Venture Partners, which also actually happens to be an investor in Flowcast, where I work. So welcome to the club, TaxJar.
Yeah, I'm interested to see what TaxJar does with this, because I know they have a loyal following. People like them. I remember I spoke to them in the past, but they never took those extra jumps to like get on all the app stores, right? And really, they don't really show up to the accounting conferences, or you really don't. That's in our space. TaxJar exists, but they're not out there. But now we may see them everywhere we go now.
Well, they got money to burn, right? They can go spend it on booths at conferences.
The TaxJar party.
Yeah, yes. I'm looking forward to the TaxJar party. According to this story, fueled by this new round of capital, TaxJar is also launching a Plus offering, which will essentially be a custom solution developed for bigger companies with more complex needs. Those plans will start at $299 per month, and it's launching today. As of the date of this article, which was the 9th of January. They have close to 17,000 paying customers that include Dell, DoorDash, and Eventbrite. And again, their main competitor is Avalara. So actually, it looks like they're going to be using this $60 million to go after some of the bigger customers that are probably either using or would be a prospect of Avalara.
Yeah, congratulations to that team.
As I mentioned, TaxJar has an all-remote workforce. They have about 60 employees. Since their start in 2013, they've grown to 60 employees. And I've got another article here about remote work. It's called Why the Virtual Office Doesn't Work for CPAs by Craig Smalley on Accounting Web, posted last week. And he says, let's face it, as accountants, we are a very conservative business. There are clients who actually want to see us, even when a phone call would suffice. And he says, after a bunch of other stuff, as accountants, simply put, it's always a mistake to not go to the office.
Did you write this to be ironic?
Oh, no.
This is a true belief.
So I've been following Craig's stories, his posts. He's a frequent columnist on Accounting Web. And I actually, he's a reactionary. I don't know if that's the correct word, but he likes to play devil's advocate. Should you go cloud? Well, not necessarily. Maybe you should stay on your desktop software. Maybe you should stay in your office. So here's his argument. He actually, and this is why I respect him, because he's actually tried it. He said that he used to work from home with a virtual office, and he had staff all over the country, but he gave that up. He said that some of the problems include clients. They want to think of you at the office every day in a suit, working on their taxes and other documents. They don't like to think of you at home with their confidential information where it is not secure. He says that when you're working with remote employees, it's difficult to control what they do, right? I can control what I do in my home, but I can't control what my employees do in their home. So how do I know they're keeping client data secure? He also said that it made face-to-face appointments very, very difficult because they weren't back-to-back. And so what he had to do is he would go into a virtual office. He would, rent space like at what are these, places, co-working spaces or whatever, and go in and do meetings, which caused downtime for him because he didn't have an office. He had to move around when he didn't have client meetings. He said training was more difficult and all that stuff. So he gave that up. And you know what? These are legitimate concerns. Like, how do you actually overcome all that?
With technology, it's probably the number one answer. There's tons of smaller solutions and different ways to go about this. But the interesting thing is that he, did it kind of say when he tried this?
No, he doesn't.
Like a timeline? Yeah, because it's interesting that he tried it and then he completely abandoned it, right? To the point where he's completely against it. But every time we turn around, there's more stories of like people having more success and more fulfillment, and it's what everybody wants to be doing.
That's a good point. Maybe Craig tried this 5-10 years ago when it was not nearly as easy, right? For instance, now you can convince clients to use Zoom rather than coming to meet you in person. And there are ways to keep your customer information secure, even when your employees are working remotely, which include virtual desktops, right? Having them log in to a virtual desktop on Amazon cloud where they can't actually download anything, stuff like that. And training, he was using Skype for Business. I'm afraid, sorry to say, Skype for Business is crap. Terrible product. Shouldn't use it. I was just on a Skype for Business call yesterday for like 2 hours and the audio kept cutting out. Come on, it's terrible. Zoom, way better. And Craig, if you're listening, you should come on the show and defend your position.
But he will have to do that remotely.
He'll have to do that remotely.
So it's probably off the table, I guess. So it's talking about where people work at. There's an article I think you linked to me here somewhere about like where Americans move.
Yeah, so I thought this was interesting, right? Because if remote work is becoming a bigger thing and we can take our practices virtual and work from anywhere, then why would we continue to live in certain places? People like to complain about where they live a lot. Where are they going is the question. So this is an article from the Tax Foundation. They do great articles, research on tax issues. And they did some research to see where are people going and where are they staying, or where are they leaving from, where are they going to, based on net migration from one state, from each state. So If you have a score of less than 50%, that means that you have a net outflow. And if you have a score over 50%, that means you have people coming in. And the top 5 states where people are moving to, where they are going, is Vermont, Oregon, Idaho, Nevada, and Arizona. So, for example, Vermont had 72.6% migration, and Oregon was 63.8%. Now, the places that people are leaving, that includes places like New Jersey, Illinois, Connecticut, New York, and Kansas. So one thing you might ask is, well, why are people leaving these places? Why are they going to these other places? And of course, Tax Foundation, because they have a tax focus, wanted to see if the tax regimes, the business tax climates had anything to do with this. And there is some correlation. If you look at this chart on their site of the top 10 best business tax climates and the top 10 worst, you can see Oregon is in the top 10. It's number 7 for taxes. Another great one, or a bad one, would be New York. New York is almost at the bottom of the barrel. Interestingly, Vermont, which is where people are going, is number 41. So it's not exactly a great place in terms of taxes. But there must be a reason people are fleeing to Vermont. In New Jersey, which is one of the top places people are leaving, is also the worst state in the country for taxes.
Yeah, and I think the big one to watch here is California.
Number 49 out of 50 for business tax climate.
Yeah. And then they're number 39 as far as the percentage of total moves, right? So they're definitely at the bottom of this. And historically speaking, I don't think that's been true for California, right? Like I have to have something tipped, because I know there's a lot of, I think like Xero moved to Denver, right? Or moved some of their office to Denver. Expensify moved the majority of their office to Portland, Oregon. So like these companies are moving out of the Bay Area and moving to these other states. And now with things are remote, I mean, you could look at T-Sheets as an example, right? They built a Bay Area type startup in Boise, Idaho. Like, do you need to be in California to build tech companies? Other than the movie industry, do you need in obviously the farming industry that feeds most of the country? Do you need to run a business in California?
Yeah, it used to be you would put up with the taxes here because you needed to be in the Bay Area or in LA to be a tech startup or to be in the film industry. But yeah, maybe that's not true anymore.
And it's very clear, like there's a migration from California to those states adjacent to California.
So what's the tie-in to cloud accounting? The tie-in is, hopefully the net migration out of some of these states with bad business tax regimes will change their minds and convince them to align their tax codes more with the low tax jurisdictions or the ones that have simplified tax regimes, right? And there won't be such the disparity between the 50 states. And hey, speaking of governments, right? Well, because we are talking about taxes and taxes mean government, I've got a little bit of news about the California Board of Accountancy, which has just recently implemented online credit card payments. So they're only about 20 years behind everybody else, but you can now renew your CPA license online and pay with a credit card. Good for you, California Board of Accountancy. Unfortunately, there is no news about whether or not it will take less than 2 months to get a transcript or anything you send to them processed, because it's still, like when I did this last year, when I got my CPA license, one of the reasons it took.
So did you have to send them a check last year?
Oh yeah.
Like how did you pay for this? I had to
send checks in the mail, and then I had to send transcripts in the mail. And it would take them a month to even process the transcript from the mailroom to the filing unit, which is what they call the people that process the licenses. And then it would take the filing unit up to a month to process the transcript. So it could take 2 months to get a transcript added to your account and get your license.
Well, they're starting to automate their process. If they can take a credit card, that's kind of the start
maybe in
of
another
it, right?
10 or 20 years, we'll have the ability to process these requests online.
And that kind of ties into that efficiency. I think you have another article you said about like businesses are now not taking any more cash because taking credit cards and e-payments is just so much more efficient.
Yeah. So this is great, right? So the California Board of Accountancy is finally starting to take credit cards as an option. Meanwhile, many small businesses in this country are actually not going to even take cash anymore. This is an article in the Wall Street Journal at the end of December called "Your Cash is No Good Here," literally. Many retailers, including Dry Bar and Sweetgreen, are banning paper money. And it's creating some awkward interactions for people who didn't bring a credit card. One of the reasons for this is you don't have to worry about employees stealing out of the cash drawer, right? That's a big...
Yeah, or being held up, right?
Or being held up. Yeah, exactly.
But even the cost, I know there's a hotel, restaurant, bar, fairly a club, Hotel Congress is just here, and it's big, and they do a lot of cash. It's a bar, and they have to have somebody basically for hours counting the cash to prepare it to deposit in the bank. Like if you have the credit card, you have it just automate that process, shove it into the in your point of sale, shove it into the accounting system. Your deposit's going to happen. You're done, right? So there's definitely an expense to taking cash. Now, apparently, maybe it's tipping that it's cheaper to pay 2.5%, 3.5%, 4% merchant service fees than it is to pay somebody to handle the cash, I guess, is where we're at with this. And then you don't have to go make the deposit at the bank.
Yeah, it's just so much less hassle. I actually remember that when I worked at Starbucks after college, there was a rule that you had to have 2 people in the store at closing basically to deal with the risk of a holdup, right? That somebody always had to be out there guarding the cash in the register.
Yeah, I remember working at the mall back in the day, and 2 people would have to walk to go put the deposit into the deposit.
Yeah,
box.
It's a lot of time. There have actually been there was a councilman in New York City Councilman Richie Torres of the Bronx recently proposed legislation that would prohibit retailers and restaurants from refusing cash, saying that it discriminates against the poor and undocumented. And as much as I like being inclusive, I don't like that idea. I think that businesses should be allowed to accept whatever form of payment they want to. What are your thoughts, David?
I went up to, for Christmas, took a little 4-wheel drive trek to some smaller town in the mountains here in Arizona. And basically it was like, there's the general store and then there's the barbecue pit bar, right? That everybody's at. They had a power issue or something and they couldn't take credit cards. It was cash only. Well, all of a sudden you're really limited on what you can buy from that business if you don't have enough cash with you really, really quickly. So like I don't know. Some part of me like feels like it's a little sad. It's the US dollar, like the physical US dollar. Like, is it really going to just go away?
I mean, it could.
Like the physical dollar?
It could.
I don't know. Maybe we'll just like you have the hipsters bringing in their typewriters and stuff to Starbucks. Maybe the hipsters will it'll be opting into cash here. Cash only. Well, maybe the hipsters will save the dollar. There's our episode title.
Well, David, I've got more to talk about, but I know you need to get on the road. And what are you, driving your kids around or something?
Yeah, we have the basketball games or picking up from school, that kind of stuff.
I'm glad I don't have to deal with that yet. Not being the chauffeur.
Soon.
I'm hoping that by the time I have to be the chauffeur, I can just pop them in an automatic vehicle or self-driving car, and they can go to their event.
I would love to just jump in an Uber and get driven home. I would be on the CNN if I did that.
There is an app now for parents to have their kids picked up. Like it's like an Uber for kids. And the drivers are all background checked and stuff. You should check it out. I mean, they have it, I think, in only some areas. It's like LA.
It's a California thing.
It's an LA. It's an LA parent thing. We don't like spending time with our kids. Yeah, we're terrible people.
Perfect. Awesome. I think that's it for this week, and then we will connect again next week. So, Blake, if people have any opinions, they want to get a hold of you, they want to tweet at you, they are working remotely and they're like, this is awesome. How would they tweet to you?
I'm at Blake T. Oliver. And how about you, David?
I'm at David Leary. And you can also like our Facebook page. We have a Cloud Accounting Podcast fan page.
Yeah, just go search Cloud Accounting Podcast and you'll get notified of new episodes. And by the way, if you would like to receive the show notes automatically every time we publish an episode, you can go to my website, blakeoliver.com, and click on the blue subscribe banner at the top. That'll get you on my email list where I have an automation set up where you get the show notes emailed out 10 a.m. every day following an episode.
And that's super convenient because like if you listen to a podcast on your phone, you're driving in the car and the show notes are there, but then the podcast is over and then your podcast player deletes the podcast. Now you've lost the show notes. So yeah, it's super convenient to get show notes emailed to you and in your inbox each week.
I forgot to say the show notes. We have every article with a little description and a link to the article. So we talk about it on the show. You can go read it later if you find it interesting.
We should put a little secret article every week.
Or if you don't like listening to us, you can just get the benefit of getting all the links without having to hear our commentary.
Oh, and on that note, we should shut it down. I'll see you later, Blake.
All right. Bye, David.